for business people.
Good morning. You're tuned in to Bloomberg Quint Live. This is Daybreak and I'm Alex Matthew. First, a look at the headlines. Asian markets take a breather after the best start to a year since 2006 in the absence of fresh triggers. Oil prices continue to rally as Brent crude closes above the $70 per barrel mark for the first time in nearly 3 years. Demand and investments are seeing a slow pickup according to the CFOs of India's top companies in an exclusive interaction with Bloomberg Quint. And the second IPO of the year, Newgen Software, opens for subscription today. Turning to the international markets, the US markets were shut on Monday, and despite that fact, the dollar dominated trading as it headed for a fourth day of declines. It weakened against every major currency. Bloomberg's dollar index is now near its lowest level in 3 years as the euro extended gains that have pushed it to the strongest since 2014. And here's why the euro gained. European Central Bank Governing Council member Ardo Hansen said the ECB shouldn't have any problems ending its net asset purchases in one swoop after September. The euro extended gains after the comments were published and the yield on the 10-year German bonds rose. Let's turn to the Asian markets now, and the equity markets have opened mixed in early trade. Let's go across live to Bloomberg's Rosalind Chin for all the updates there. Rosalind, over to you.
Well, there hasn't been much of a lead from the US overnight because of the public holiday there. So really, the markets here are not really sure what direction they're moving in at this point of the morning. We're seeing the Asia Pacific Index, MSCI Asia Pacific Index, down by just about 0.1%. Now, on the markets here, we're just seeing the Hang Seng and Shanghai Composite open for trade just a few minutes ago. And Hang Seng actually pulling a little higher, up by 0.4%. And the Shanghai Composite, though, pointing the other way, down by about 0.1%. Now, we're looking, for example, at the yuan, because that is at its strongest level in more than 2 years. It's been a big focus for traders. And of course, because of the strength in the yuan, there's a lot of speculation about what might happen if authorities decide to step in to cool it. Essentially, of course, we're seeing dollar weakness all around. But the yuan, of course, a big focus here. In China, yesterday we saw financials performing strongly, pulling higher there yesterday. It looks like some traders are going for blue chips instead of smaller companies. And right now, though the Shanghai Composite is pulling lower by about 0.1%. In Japan, we're seeing that Japanese shares are close to multi-decade highs. They are gaining today, the Nikkei and the Topix both up in early trade. And in Australia, let's take a look at a couple of companies. BHP Billiton, that is trading lower after a ratings downgrade that is now losing 0.7%. And also the Commonwealth Bank of Australia down by 0.4% this hour. And Telstra, that is also dropping. That is down by more than 1%, down by 1.3% right now. Those three, the biggest drags really on the benchmark index. The S&P ASX 200 down by just over 0.1% right now. And of course, oil, you mentioned that did bip up. Brent trading at the highest level in 3 years, closing above $70 a barrel. Brent right now trading at $70.10 a barrel, and WTI at $64.61. Back to you.
Thanks so much for that, Rosalind. Let's turn to the Indian markets now, and Darshan Mehta and Agam Vakil are here to set you up for the day's trade and also to tell you what's happening in the futures and options space. Morning, guys. Darshan, first to you. Commodities looking strong today.
Yeah, absolutely. We're not getting any cues from the US markets because they were shut. The ADRs, we're not getting cues because the US markets were shut. But yes, commodities as a package doing well. First, let's focus on the SGX 50. That is indicating a very flat start as far as our markets are concerned. But we closed at record highs yesterday, so it shouldn't be a bad opening as far as our markets are concerned. Now, crude is the one that is taking all the limelight. Crude has gained for the 6th day. It closes above the $70 barrel mark after 3 years. So this is the Brent crude that we are talking about. Even in morning trade, it is doing well. OPEC and the allies are actually trimming production to drain the global glut, and that is why prices have managed to remain at those levels. So there is almost a lot of traction that's happening as far as crude is concerned. The other one is commodities. Very strong close from base metals on the London Stock Exchange. So the LME numbers will come out on your screen, and they are absolutely strong. All the metals on the LME ended with a positive bias. You can see lead was up almost 2%. Copper was up almost 1.5%. You could see copper, even COMEX copper is trading with a positive bias currently. So that's the cue that's coming in. Right now in China, aluminium and zinc are trading down, but the other metals seem to be doing well in trade. So if you pull up the other metals that are happening, the other commodities in China, positive opening. So steel, rubber, copper, all of them have opened up. Aluminium, as you saw, was trading down in trade. Even gold is trading with a positive bias. Gold trades with a gain for the 5th straight session. So there is a lot of traction that's happening as far as gold is concerned. Now, if you're looking at what happened with the fund flows, FIs were net buyers, DIs were net sellers in the market yesterday, but on a month-to-date basis, both of them have been net buyers. 1,600 crores of net buying by FIs, almost 1,300 crores of net buying that happened by the DIs. The other factors are which were the sectors. Nifty outperformed the broader markets yesterday. It closed at fresh record highs. Some of the counters which did well, the Nifty PSU Bank Index was up. This is the Nifty Bank Index that was up. The Nifty Bank Index was up almost 1.2% in trade. Auto as a pack is bleeding significantly because Maruti, Tata Motors, none of them seem to be contributing. So that was down in trade. We were up 60 points. What contributed? Mainly the banking space. HDFC, ICICI Bank, HDFC hit a market cap of 3 lakh crore yesterday. Kotak also. So all the top 4 were banks. What didn't do well? Maruti again continues to bleed. TCS saw a negative outlook, and among the private banks, IndusInd didn't do well. But Agam, what are the FNOQs indicating right now?
Well, that's a new lifetime highs for the Nifty. As you can see, we closed about the 10,740 mark. Well, a lot of longs building into the system. As you can see here, another 3.5% added towards the futures. And the Nifty Bank futures too did see about near 18.5% added as far as open interest is concerned. So longs building up there as well. Coming down to the India Volatility Index, so we've seen a 4% rise above the mark of 14, still range bound between 13.5 to 14.5. But when it comes to the put call ratio, that's also edged higher to around 1.78, the highest level that we've seen in many, many years. That said, well, we are looking at more writing now in the 10,700 puts. So that's shifted from 10,500 to last week to around 10,600. Now it's 10,700 put, where we're seeing more and more writing. So we'll be watching out for that. But that said, in terms of changes, in the FNO band, we have Capital First as well as IFCI, which enters the band. No stocks moving out. However, we have seen a substantial amount of increase in open interest for HDFC, where we have seen more longs building in. And of course, the other stock is PC Jeweler, which has also moved up by 6.5% and another 21% added in open interest. So a lot of stocks out there. But really, the real question is whether or not the Nifty can hold on to 10,700, considering the underlying variables indicate, well, some amount of restlessness as far as the bulls go.
Absolutely. Thanks so much for that, Agam. Let's turn to the rupee and the bond market now, and Saloni Dhanuka has all the updates there. Saloni, the big talking point is the dollar weakness.
Absolutely, Alex. So dollar weakness actually boosted Indian rupees appreciation, which we have seen yesterday. So tracking gains in the Asian countries market, the rupee surged over 14 paise to touch a fresh one-week high of 63.49 levels against the dollar. Now a record rally in local equities market along with global dollar weakness largely supported the rupee's big move. Also, Rohan Mathur, who is an FX trader at UCO Bank, believes that better than expected industrial production growth points to improving economic health, which thereby augurs well for foreign inflows and which eventually will support the bonds and the rupee market. While on the flip side, Emirates NBD, which is one of the largest banking groups in the Middle East, expects rupee to fall to 65 a dollar by March end. Now on the global front, dollar continued to trade weaker against other major currencies despite thin trading holiday yesterday on account of a US holiday, while the euro gained as much as 0.8%, just few pips away from the 1.23 mark against the dollar, its strongest level in over 3 years, on speculation that the central bank is all set to reduce its vast monetary stimulus program. While joining the hands with euro, the sterling also pushed higher against the dollar after rising 0.6% to 1.38 mark against the dollar, the most since Brexit vote in June 2016. Well, coming back home, dollar rupee is trading flat in the non-deliverable forward market, which indicates a flat opening for Indian rupee in today's trade. Well, moving on to bond market, the bonds gained yesterday while the yields ended steady at 7.44%, while global funds reduced their rupee debt holdings after infusing for 5 consecutive sessions. They reduced their debt portfolio by approximately 900 crore according to NSDL data.
Thanks so much for that, Saloni. Let's turn to some important macroeconomic data that came out last evening. India's trade deficit has widened to $14.9 billion from $13.8 billion in November. Rising exports were offset by a surge in the import of gold, jewelry, and the jump in crude oil prices that we just told you about. The trade deficit stood a little over 41% higher than the same period last year. Merchandise exports for December rose over 12% from a year ago to $27 billion. Goods imports came in at nearly $42 billion for December. This is a gain of 21% from a year ago. Shifting focus to the commodities market, and that's primarily what we're talking about today, considering the focus that we have on crude. Jayesh Khilani joins in with all the details. Jayesh, crude on everyone's lips.
Yes, Alex, that's right. So crude has actually rallied to 6 days in a row now, and Brent overnight closed above 70 per mark, for 70 per barrel for the first time in over 3 years. Now, what we're seeing from the US is that hedge funds have increased their bullish bets for WTI contract in more than a decade now. But on the other hand, a word of caution coming in from Citigroup, SocGen and JP Morgan, who predict that OPEC might be looking to wind down the supply curbs that they have imposed going into 2018. As far as precious metals are concerned, gold rallied to a 4-month high on the back of the slump in dollar index that we've seen. So COMEX gold was up 4 days in a row and is trading near the 1340 mark. COMEX silver, on the other hand, also gained more than 1% each for each of the last 2 days. This is on the back of the dollar index, which has been trading below the 91 mark for 3 consecutive sessions now. As far as base metals are concerned, this too saw a boost on account of the dollar index. So it was a strong close by all of the base metals on the London Metal Exchange. The index itself gained more than 1%, was up 4 days in a row now. Lead, which was the best performer, surged as much as 2%, and copper, zinc and nickel gained more than 1% each. Zinc actually hit a fresh decade high, while copper jumped the most in over 2 months. Tin was up about 0.5% odd, but it did hit the highest level that we saw in the last 3 months. Now, if you look at the Shanghai Futures Exchange, similar action cannot be seen by these base metals. Most of these base metals are actually trading mixed. So you have copper and steel, which are up in trade, while on the other hand, you have zinc and aluminium, which are seeing mild decline for themselves.
Thanks, Jayesh, for that. Let's move on now. Is a tax cut likely this time around in the Union Budget 2018? Where is the government expected to focus, and what about long-term capital gains? I don't have those answers, but we asked the big voices from India Inc., and this is what they had to say.
There seems to be clear demand coming to the rural sector. And therefore I'm seeing a lot more positivity in Q3 than what I've seen from some time back. So when you do GDP for Q3, maybe when the numbers come, and often we have sat here and said something which has been wrong, but it will be better than Q2 is what I feel. So first and foremost. But what will it be? Will it be instead of 6.57? And what is the potential that we can get, and what do we need to leapfrog ourselves from to a robust growing economy? What about irrigation? We had 2 decent rainfalls, we still survived. Irrigation is improved, but is it at a place where it should be? Getting more water conservation in, whether in terms of drip irrigation or anything, even at the lower level, how do we continue?
All government expenditure you're talking about.
All government expenditure, but let them focus on productive assets.
Capacity utilization today improved, majorly driven by many of the sectors by exports. Exports are picking up.
Okay.
Domestic demand side, if you ask me, is it really improved substantially relative to what it was? There is some improvement. But that robustness which is required, bringing back confidence into private sector investments, I think it will take some more time. So if you take any of the core sectors of the economy, there is surplus. That surplus is to be absorbed and confidence has to come to bring back the more and more investments. That is what government has to do.
When you talk about large amount of giveaways already happened, we're talking about across the board. Now, a giveaway to a low tax paying company and a giveaway to a large tax paying company is very different, as you can sense. The government needs to do possibly something out of the box if they want to augment tax revenue, because the traditional revenues are getting squeezed dry. The tax administration has not got any easy. The mood seems to be, and the compulsion seems to be, tax the guys who can afford, let the traffic bear. So I'm of the opinion that I'll have to be prepared that he will not reduce the taxes. He will not tinker with MAT. I fear he may even look at the stock market earnings. With the demonetization, the slump in reality, the gold prices being static. Of course, the oil prices have run up now, so maybe the gold will run up, I wouldn't know, but the asset class have turned to financial assets.
Right.
And they're all invested in the market. And invested in the market for quite some time to come, is my belief. So they're going to generate long-term capital gain. I think he would be looking at that space with a lot of interest.
Well, it's the second IPO of the year. Software product company Newgen Software Technologies looks to raise 425 crore rupees from the primary market. Somit Sarkar is standing by with all that you need to know about the company and its public offer. Somit, morning.
Good morning, Alex. So Newgen is the second company that is looking to raise money in 2018. Now, the company is looking to raise around 425 crore rupees at a price band of 240, 245, and at the upper end of the price band is 245. The market capitalization of the company would come to around 1700 crore rupees. Now, the IPO is a combination of offer for sale and a fresh issue. And the offer for sale, there are 4 private equity investors that are looking to almost exit from the company, making handsome gains. Now, IDG, VI, Ascent, and Pandora will be making around 2.7 times their investment in the company, while SAP5 will make around 5 times its investment in the company. Now, there is also a fresh issue of 95 crore rupees, of which 84 crore will be used by the company to purchase and furnish a new office, while the remaining will be used for general purpose. Now, if you see, Newgen is a software product company with over 450 customers in over 60 countries. Now, the company earns revenue from multiple streams, with but annuity-based products is which is contributing 50% of its revenue. Now, if you see here, for the first half of financial year 2018, the company got around 25% from sale of products, 50% from annuity-based products, and 25% from sale of services. But when you see segment-wise, the company generates 48% of its revenue from the banking sector, while government contributes around that is PSU sector units contribute around 12% to its revenue, while the other is contributed by BPOs, insurance, healthcare, and other business sectors. Now, if you see, moving on to the company's financials and peer comparison, over FY15 to FY17, the company's revenue and net profit grew at a compounded annual growth rate of 17.7% and 6.3%. Now, Newgen was able to report only single-digit bottom line growth because its operating margin was not stable. Now, on the other hand, Intellect Design, its competitor, revenue grew at a compounded annual growth rate of close to around 22%, but it reported losses when it comes to the bottom line. On the balance sheet side, if you see, the company's net worth was close to 272 crore rupees, and the debt to equity was at par with its peer, that is Intellect Design, at 0.6 times. Now, if you see the return ratios were better than Intellect. Its return on equity was 4.3, return on capital employed at 5.2, and return on asset at 2.5 times. On the valuation side, at the upper end of the price band is 245. The share prices of Newgen are very expensive. The price to earnings stands at around 145 times, while price to book at 6.2 times. Lastly, the brokerages remain divided on this IPO. Now, Angel Broking has a neutral rating on this IPO, as they believe that the company valuations are very high compared to its peers, and the past financial records does not provide any strong confidence when it comes to this IPO. While MK Global has a subscribed rating on this IPO because they believe that the company has a strong business positioning and would be able to continue its revenue growth in the coming years.
Thanks so much for that, Somit. Moving on to the stock of the day, Delta Corp is a stock that we're talking about. It has reported a stellar third quarter. Net profit jumped nearly 350% on a yearly basis. Let's go across to Nikki Mirchandani for all the details. Morning, Nikki.
Hi Alex, good set of numbers coming in from Delta Corp. It's a 56% growth that we're looking at in the top line numbers at around 162 odd crore as compared to 104 crore that we've seen in the corresponding quarter. A good show on the bottom line front too, more than 4.5 folds jump that we're looking at in the net profit number at a number of around 44.7 odd crore. EBITDA operating performance also has been good enough for this company, and that's a two-fold jump there at a number of 68.7 crore as compared to 32 crore that we've seen in the corresponding quarter. Margins have expanded to 42% as compared to 31% that we've seen in Q3 of the last year. The factors that go behind the making of the numbers, higher sales aided are also coming in due to the contribution of online gaming business, which wasn't present in the corresponding quarter. And also, if you see, revenue from the casino business has shot up by as much as 75% on year-on-year basis. Now this, along with your cost optimization techniques, has also led to a good operating performance. Good operating performance, higher other income, low finance costs has percolated down well in terms of bottom line. Other income has grown by 7-folds for this company on year-on-year basis, while the finance cost has come down by more than 95% for this company at a number of around 34 lakh negligible finance cost that the company is now working at. If you look at the operational, the segmental breakup, to begin with the revenue, you will see casino business is the major contributor with a revenue of around 75%. Online is at 14%, and hospitality business contributes the least towards its revenue, as much as 11% odd. In terms of operational performance, you would see casino business being the highest margin contributor, and you would see some amount of losses coming in from hospitality business. But do bear in mind the fact that on year-on-year basis, the losses have narrowed down for this division. It's the only listed company in casino online gaming business, has a market capitalization of around 8,500 crore, and also do bear in mind the fact that Rakesh Jhunjhunwala nearly holds 8.5% stake in the company.
Thanks for that, Nikki. So clearly, Delta Corp is a stock that you have to watch out for today. But what are the other stocks in the news, and what are the stocks that you have to watch out for? Better take out your pens and papers and take note, because Shraddha has an entire list for you. Shraddha, over to you.
Well, on the back of earnings, first, Alex, we have Federal Bank. The bank did meet estimates as far as the top line and the bottom line numbers are concerned, but the gross NPA did see a small rise on a sequential basis. So, net profit rose 26.2% to 260 crores, while gross NPA came in at 2.52% versus 2.39% in the September ended quarter. You also had India Grid Trust, mixed set of numbers coming in there. Revenues were down 4%. Net profit, however, grew by about 13%. Strong quarter coming in from Z-Learn, where revenues grew by 73%, EBITDA grew by 89%, margins also saw a bump up of about 300 basis points to 34.6%, and the net profit grew 250% to 7.7 crores. So this is of course on a low base. Amongst the other stocks, according to a ET report, Blackstone was in talks to buy commercial property portfolio from Larsen & Toubro for about 2,300 crores. Keep an eye out on that name. Bajaj Finance has said that they will now hold 12.6% in MobiKwik on a fully diluted basis post conversion of the convertible preference shares versus the previous 10.83% that and that the change on account of the acquisition of MobiKwik that they had done in August. The increase in the stakeholding is because of the change in the conversion price of the CPS. BSE, with the board has approved a buyback of up to 15 lakh shares at the price of 1100 per share. You also have Vascon Engineers. Now the company has said that they've sold 85% of the units of its new residential project Forest Edge on the first day itself. Max Ventures, which is approved fundraising up to 450 crores via rights issue. Bharat Bijli will receive a sum of 47 crores from MIDC, and this is towards the acquisition of land situated in Navi Mumbai. BL Kashyap and Sons, we could see some positive reaction there. Standard Chartered Bank has approved a one-time settlement scheme. And lastly, on the back of bulk deals, you have Astra Microwave, where investor Dilip Kumar Lucky bought 1% stake yesterday. And in Podar Housing, you had Value Quest India Mode Fund, which sold 1.4% stake yesterday. So we could see some negative reaction on that one. That ends my long list, Alex.
Thanks so much for that, Shraddha. And Somit has a couple of interesting stocks to tell you about in the big brokerage calls of the day. Somit, what do you have for us?
So the big brokerage calls for the day. First, SJM Financials on Cochin Shipyard. Now they have initiated coverage on the stock with a buy rating and a target price of around 700 rupees. Now Cochin Shipyard is a strong player in the Indian shipyard industry, and its large dock size and strategic location places the company in a sweet spot according to the brokerage. Now Cochin Shipyard is investing both in capacity and capability to pave way for the next leg of growth. Now going forward, favorable government policies would enable a sustained flow of orders, and along with that, defense, inland waterways and oil and gas sector will also offer the next leg of growth for the company. Now Cochin Shipyard's robust order book provides revenue visibility over the next 7 to 8 years, and the brokerage expects the order inflow momentum to sustain as the Navy orders jump 3 times in the next decade. Now, the company is also expected to remain debt-free going forward on the back of its healthy cash flow and negative working capital cycle, and they're expecting the company's revenue and EBITDA to grow at a CAGR of 18% over FY17 to FY20, and they're expecting the dividend payout from the company side to remain around 25% for the next few years. Second, we have is UBS on Reliance Industries. Now they have initiated coverage on the stock with a sell rating and a target price of 870. Now they're expecting Reliance EBITDA to expand but deleveraging to be delayed. Now they're saying that the debt reduction would be back-ended due to additional capital expenditure on the telecom business and on the upstream business. They're saying that the refinery petchem integration would boost the returns and reduce cyclicality, but stabilization would still take time. On the GRM front, they're saying that the GRMs are expected to remain on the upward trajectory boosted by the petcoke gasification benefits, and on the petchem side, they're saying that the brokerage, they're saying that the EBITDA would almost double over FY17 to FY20 due to capacity expansion and cost benefits from integration, and volumes are expected to grow at a CAGR of around 8% over FY17 to FY20. On the retail side, they are saying that the revenue and EBITDA would grow at a CAGR of around 22% and 24% over FY17 to FY22. And on the telecom business, they are saying that the Jio's market share would expand, but ARPU, that is average revenue per user, would remain low due to prolonged market share competition. Overall, they are expecting the company's EBITDA and EPS to grow at a compound annual growth rate of 19% and 14% over FY17 to FY20. Lastly, it says that the current share price has factored in all the benefits from the refining and the petchem project.
Thanks so much for that, Somit. Now, my phone doesn't have facial recognition, but there is a phone out there that does. I've heard it's pretty cool. But why are we talking about that? As the government looks to allay privacy and security concerns with the Aadhaar, the UIDAI has said that the program could come equipped with facial recognition by July this year. The UIDAI hopes that this new feature will help senior citizens who find it difficult with fingerprint authentication. However, face recognition will be used to authenticate Aadhaar only if it is combined with existing authentication methods like iris scans or fingerprints. The new method will also be allowed on a need basis. This is the third layer of security that the UIDAI plans to add to the Aadhaar program after reports of breaches and leaks in the system created quite a stir. Now clearly, there's lots to talk about over the course of the day. You will find all the live market action right here on Bloomberg Quint Live. But there are also several stories like the one I just told you about on the website bloombergquint.com. Here are a couple of others. India's power ministry is considering ending the lock on electricity sales by distributors as one way to speed up growth in vehicle charging stations, according to a ministry official with knowledge of the plan. And speaking about cryptocurrencies, China is escalating its clampdown on cryptocurrency trading, targeting online platforms and mobile applications that offer exchange-like services, according to people familiar with the matter. That's a Bloomberg story. Well, with that, it's an end to this edition of Daybreak, but all you need to know is up next. Do stay tuned, and thanks for watching.